You're not saving money, you're losing money. In this video, I'm going to break down the problem with saving money and just having money in your savings. Remember, this is according to my own research. This is based on my personal view. This is not financial advice. I do have a free newsletter if you do want to keep up to date with financial markets. Link to that will be in the description. So first of all, nominal returns versus real returns. So your balance going up does not mean you're actually getting any richer. So what you've got to remember is money is being devalued year on year, inflation is going up, your purchasing power is essentially going down. So the first mindset shift you've got to think is, okay, cool, am I outpacing debasement? Am I outpacing, inflation, all these things? That's the real return. You've almost got to like discount, I don't know, 2-3%, whatever it is, before you start going. Some people argue it's 8 to 10. You've got people like Raoul Pal, Michael Saylor. What he's done with Bitcoin is because of this. It's like, oh, my money is going down so much year on year. How can I get a return? So this is the first thing you've got to think of. Most people tracking nominal returns, and they should be tracking the real return. The real return is after debasement, after inflation. So that's the first mindset shift you've got to have when it comes to saving money. Is 3% inflation the new normal? So thought this would be interesting to put in because, as you know, we've been above 2% inflation for some time now, and it doesn't look like we're coming back down anytime soon. And Kevin Walsh has got a really tough, gig on his hands, really, as to what direction he's going to take things in terms of rate hikes, rate cuts, and all this stuff. And yeah, it seems like after the meeting, and some of the stuff we've been seeing is like, are they going to accept above 2% as the new norm? They obviously can't say that, but it will be done sneaky, in a sneaky way if they are going to do it. But maybe this is one of those things where we look back in 20, 30 years' time, it's like, oh, do you remember 2% inflation as the target? So look, this is something that I thought would be interesting to put in. Like, this is something you've probably got to be conscious of as well. Like 2% inflation, that's like general consensus, when really like you probably should be looking at 3% inflation moving forward. This may not happen, but I thought it was worthwhile putting in. So I wanted to put this in as well. So inflation plus tax. So this is the real hurdle. So if you're a business or you've got a cost of something, whatever it may be, you've got to do after taxes, yes, but you've also got to do after inflation or after debasement, whatever number you've got to do. You've got to do your own research when it comes to this. I'm only trying to put some stuff together. But as you can see there, if you want to pause the video, break this stuff down. But look, that's something you got to do. The hurdle is inflation plus tax drag. So anything below it, you're losing purchasing power in real terms. So that's something you've got to also factor in. After taxes, you might have, a business that you're running, you've got all these expenses, then you've got inflation to deal with. And maybe you're getting tax rises if you're in a particular country. So you've always got to factor in taxes and inflation together if you really want to get that real number and return of what you're actually getting on your money. So businesses face the same problem. A 10% profit margin is not the same as a 10% return on capital, right? So return on invested capital measures how efficiently a business uses its capital. So if it's below the cost of capital, the business is destroying the value. If it shows profit on the income statement. So again, businesses are facing the same issue. It's like if debasement is 8 to 10%, if inflation is going to be near 3%, is your business growing year on year in that? Or are let's say for example, your cash reserves at the year started at 500,000, have you grown by that much? If not, your cash reserves are going to be negative. They're not going to be negative, but because of this never-ending treadmill, they are essentially you're not making much money. So you've got to be really conscious of this. And you've been seeing this in places like the UK. A lot of companies going insolvent just because they can't keep up with this. Their costs can't keep up with it, right? So a lot of the companies who can tend to be the bigger ones. You see acquisitions happening a lot. You saw with the AI stuff. You've got the big tech just acquiring companies. You saw SpaceX acquiring, what they're called again, Circa AI. I can't remember the software development coding thing, but you've got this problem that businesses are facing. I'm not saying Circa were in that. Cursor, that's it. Cursor we're in that issue, but this is something that businesses are facing as well as the everyday person. So it's a real, I don't want to say a rat race, but it's a real kind of race to the bottom. In terms of like trying to not get in that trap of not growing year on year. You need to clear the hurdle, not beat the market. So inflation plus tax drag, everything below is losing. We spoke about this, so you want to just clear that hurdle. That's something that you want to be really conscious of. You want to be asking yourself, are you clearing it? So you want to be always saying to yourself, am I, beating debasement? And, in the S&P, for example, that's gone up 12% since 2008, 2009, roughly. So you could argue since then that, okay, cool, that's beating 10% by 2%. Bitcoin the same, real estate the same, and so on. So you've always got to be asking yourself, are you above that level? That's what you've got to ask yourself with savings, business, whatever it may be. So once you understand, the hurdle question, it becomes very simple. Are you essentially clearing that debasement, inflation, sort of drag that you are getting? The verdict: nominal returns are what you see. Real returns are after inflation and tax. So that's what you really want to be conscious of. It's like, yes, taxes. Okay, cool. We made this much profit, but it's like, okay, cool. Well, with inflation and all that stuff, you've got to. You don't obviously just add that into your P&L for the year, but it's just like, we compared to last year, we made an extra 8% in profits. But then you've got a thing in the back of your mind, well, after inflation, it's probably more about that. Takes you back down to earth, probably humbles you a bit more. 3% inflation may be structural, not temporary. So the 3% inflation target could be the new norm. Something definitely to watch because it may not happen, but something to definitely see. Like, will we ever see 2% inflation again from the reports? Who knows? And look, you don't need to be in the market. You need to clear the hurdle. You just need to always think to yourself, is my business growing, or is my savings or whatever growing to outbeat the debasement? If you want to keep up to date with markets and find out what's going on with this whole debasement trade, for Time to Spend your free newsletter, link to that will be in the description. See you in the next one.